Ching, 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 let me hear them dollar ring. Hello and namaste and welcome to MOM Square. I'm Vivek Shetty, an engineer by profession and an investor by addiction. If you and I share the same addiction, we are on the right page. Yes, guys, we are on the right YouTube page. And while you're there, do not forget to hit subscribe and click on the bell icon. Today's video, guys, and the videos that you're going to see over the next few days, because this is part 1 of part 5, is to talk about what I'm going to do with my hard-earned $150,000 when the market crash happens. Okay, I do believe there's a market crash coming, and I've rationalized the same in a video, the link to which is in the description section. So go check it out, okay? So I have $150,000 to invest, and I'm going to be investing it in stocks, okay? And I've identified or shortlisted 19 different stocks, common stocks, that I am very, very, very interested on or hyped on based on the research I've done on them, okay? These videos are going to be me talking about them stocks individually, talking about what portion of my $150,000 is going to go into this stock, and at what intervals or what price targets is that going to happen, okay? Look, guys, I'm not an investment advisor by any means. I do my own research and I invest with my own funds. These videos are purely there to share my research and share my experience with you guys, and we hopefully grow together in the process, okay? Speaking of which, sorry about that. That's my pet, Louie. He's chasing somebody, it seems like, while we'll go back at chasing our stocks, okay? So 19 stocks. If there's any stock that you think is a dud, or if you feel like I should add additional stocks to my list for when the market crash happens, do let me know in the comment section, okay? Let's jump into it, guys. The very first stock that I'm going to talk about today is UWMC. It's called Universal Wholesale Mortgage Company. It's right in the name there. It's a wholesale mortgage company, okay? It's #1 in the nation and has basically been there for the last 6 years, okay? Which is one of the primary reasons why I'm buying them, okay? So I as you guys know, if you've watched my previous videos, I flip homes. I have a couple of rental properties. Over the last 10 years, I've been doing that. I've also been investing in stocks, but I have worked with multiple mortgage companies or multiple lenders, and slowly I learned or evolved to learn that working with mortgage brokers is the best way to do your whole mortgages, okay? For various reasons, okay? I'm not going to deep dive into it, but that's what I've learned. If you have any questions, I can let you know the details. But that is when I came across UWMC. Obviously, I think it went public with a SPAC too, so it came under my radar, and then I started to do more research about it. So obviously, it's a #1 in the nation. Makes a compelling case to go after it. However, the other reasons that I'm going to do it for is because of their dividend yield. At current state, their dividend yield sits at around 4.2%. And as of Friday, I believe they were trading at, what is it, $9.50, okay? Now, my target price for the stock, when I'm going to enter it, right, technically, is basically at around $6, okay? That puts the dividend yield at around 6.7%, which is a good reason to have, I'm not a huge dividend-based stock investor, but this is one of the reasons why I want to invest into it, okay? The other thing is, in the Q1, their revenue was around 860 million in Q1, okay, of 2021, which is 42% higher compared to the Q1 of 2020. Okay, guys, I do understand the interest rates went down. A lot of people were refinancing and whatnot, but those are good stats. 42% growth compared to last quarter, 2020. It's impressive, okay? They had some 49.1 billion of mortgage, basically loan volume, okay? They call it the Q1 loan volume was 49.1 billion. I can't talk today. 49.1 billion is what their loan volume was, okay? They have some very good numbers when it comes to fast closing. Like they have They have close to time, right? Or they call it, what is it? Days from close is 17 days. Okay, quite impressive. Now, I have refinanced a couple of my rental investments or properties late last year and early this year, and I'm seeing that be around 55 to 60 days. So having something around 17 days for Q1 is quite impressive, okay? And they've been able to do so because they continue to invest heavily into their technology that makes things much more efficient for them, their underwriters, and so forth, okay? So there's their dividend, there's their technology aspect. In fact, I think they're gonna make more investments for their machine learning and robotic process automation, okay? They're also gonna be investing in cloud to help, expedite and make it much more efficient for their underwriters to close on deals, okay? Or close on the mortgages. So going back, dividend yield, we got their market share or market positioning being number one. We got their Q1 numbers looking good. Sorry about Louis there. Okay, and the technology aspect of it, okay? So I'm putting roughly $5,000 into the stock. And this, guys, some of these numbers might vary or deviate a little bit when the time comes to actually execute the plan. What I mean by that is if the market crash happens at a speed that I'm not expecting, and I think that, it's going to go below $6, I might hold off buying or things like that, okay? Obviously, I can't time the market, so I have done a layered approach as to when I'm going to invest, okay? This is a plan, basically, and when executing the plan, we might have slight deviations, okay? Talking about technology with UWMC, it's a good transition to talk about my next stock pick is AI, okay? By the way, guys, the stock picks I'm referring to are totally random, at least for the first few parts. The last two parts is where I'm going to talk about my top 10 picks, okay? So you get the perspective. It's like 19 stocks. We're going to talk about the 9 stocks here. And then the last 2 or 3 parts, we're going to spend more time about my top 10 picks, okay? Going back to AI, it's C3 AI. It's a leading enterprise artificial intelligence software provider, okay? AI, I personally believe, has a very strong future in the coming years. We are already seeing some crazy technology improvements in the EV segment, may it be your cars, may it be your robotaxis, your electric airplanes. I mean, I know I talked a lot about EV, but there's technology enhancements happening in multiple business segments. And what I like about this company is they have their feet wet in all these majority of the segments. I mean, I would say they have a huge offering, in terms of softwares and solutions. They hit manufacturing, they hit defense, they hit, construction. I mean, the list goes on and on, right? The spread they have in terms of the service they can provide in all these segments is mind-blowing. And for me, that is a huge plus because, like I said, there's going to be huge technology advancements happening. And for that, you need to get, you need to rely on AI, in my opinion, artificial intelligence. Okay. Right now, actually, I think they are currently trading at a discount, at a 60% discount from their peak. And that's because of the valuation concerns, which I'm concerned of the valuation as well, because I believe they're roughly at around 40 times the sales. That's the price, basically PS ratio, right? 40x, which is high for a company. But again, it's seen as a growth company, so it's tough to say, what ratio it should be at for a company like that when you don't know, we can't pen down a number on how much growth they're going to see in the coming years, right? However, though, my target price is for entering this is going to be close to $40, $45. I'm going to be putting another $5,000 into the stock, and I will basically buy this in a layered approach, okay, at certain dips. I do believe this will pull down with the market crash as well. And obviously, though some of you might think it's unrealistic because right now it's trading at $59, how is $40, $45 make sense? I do feel it will go there. I think its lowest was, 52-week low was $47, $48 or something. So we will try to buy in our first 50% at that point, like 45, 40. give or take. Okay, depends on how fast I see the movement happening in the price. Okay. Again, the reason I'm buying into this is because I'm so hyped about AI's future, artificial intelligence future in the industry, in the overall industry. And these guys have some powerful prediction tools, which helps improve productivity. And we're going to see a lot of corporations, including manufacturing and construction, a lot of focus and emphasis is going to be towards improving productivity and having AI, lead the industry in that sense. I feel like they got a good future. The next stock that I'm going to talk about is Mile. Metro Mile is the name of the company. The ticker symbol is Mile. I'm going to invest another $5,000 into the stock in a layered approach, with my target price being around $6.50. Okay. Now, why Metro Mile? Okay. Before we talk about why Metro Mile, if you're not familiar with Metro Mile, it's basically a very interesting concept that is what is also the reason why I'm buying it, is that like your traditional insurance companies, they charge you based on your age, based on how many miles you drive, but it's a rough that's weighted. It's not weighted as much. The miles you drive is not put too much weight on. So in short, you might be overpaying if you are somebody like me who doesn't drive a whole lot. I mean, I drive to my rental properties, to work, and other places, but I don't consider myself as a heavy commuter, right? Highway miles. I mean, it's give or take, I drive around like 50 miles a day. Okay, and especially now with the COVID, we are not in the office as much, so we are not driving as much. So what Metro Mile does for you, so I mean, by the way, the stats say that around 60% people are overpaying with the traditional insurance. And I believe that, okay? With Metro Mile, what they're doing is they found a niche, and they're saying that they will start, they're only going to pay for how many miles you drive. So the way they're structured is there's a $29 flat fee, okay, monthly basis, and then you pay around 6 cents per mile that you drive. Now, in my example, I did the math. My month, I end up saving around roughly 25% if I go to Metro Mile. However, not yet, because they're not in Wisconsin. I'm in Wisconsin. If you couldn't already tell, where's my finger? There you go. I'm in Wisconsin. They are currently only in, I'm going to read this names for you because I couldn't memorize all the states. They're in Arizona, California, Illinois, very close to Wisconsin, so hopefully they're coming to us soon. New Jersey, Oregon, Pennsylvania, they got Virginia and Washington, okay? So no Wisconsin yet. However, if Metro Mile was here, I would have ended up saving roughly 25% on my current insurance, which, if you put it in perspective, I can see a decent chunk of people moving towards this insurance because of that reason, okay? So I see some good future with this, with this particular company. Again, you don't overpay. I mean, I always like to think about any companies that come up with a new algorithm or new ways to charge you for their service, or in this case, insurance, and it's going to be lower than the competition. I feel that's going to improve their market share, right? And that's the reason I'm buying into the stock. So today we talked about 3 stocks: UWMC, AI, and Mile. We will talk about the remainder of the stocks in the next parts. Hopefully this video was valuable. Please leave comments and tell me what you think about my picks, the 3 picks so far. And if you think, you agree, you disagree, or indifferent, please let me know in the comment section. And do not forget to hit the subscribe button, guys. It means a lot. It helps the channel. It helps me. It pushes me to get more content out there in front of you and hopefully grow together. Okay? Until the next video, adios.